you can go ahead and introduce yourself and let everyone know who you are and who you work for.
Hello, so my name is Akeia Jones. I am a loan officer with Loan Depot. My office is based out of Chula Vista, and I've been in the game almost 16 years now. Rode all the roller coasters, and this is just it's a new territory for us, but it's fun.
It's a new ride for sure. Cool. So 16 years you've been in the lending business?
Yeah.
Awesome. And where did you start off? Have you been with Loan Depot this whole time?
No, so I actually started off with a broker in La Jolla. And then throughout the years, I've been everywhere from smaller mortgage lenders to Wells Fargo. I was there for 4.5 years. And then I went to Cross Country Mortgage, and now I'm at Loan Depot simply for their platform, digital platform, quick closings. They have array of, array. It's been too long. We've been in the house too long. And so, yeah, I've been with them since August of last year.
Nice. So you're very well-rounded and experienced, and I heard you worked for Wells Fargo, so you know how it goes on the lending side from a bank.
Oh, absolutely.
So that's good. That's good to know. Now I just kind of wanted to go over a lot of, kind of what's going on. I keep getting a lot of questions from clients and just people who are considering buying right now because of rates. But I know there has been a few changes since, the coronavirus. And what have you seen that's been changing in that aspect?
Everything has changed. Our way of life has changed. Guidelines have changed, lending across the board. And it's really just it's a safe measure just to protect, as a lender, as a banking institution, to protect our assets, the servicing of the loans. And so there has been, for the first 2 weeks into April, it was just up and down, guideline change after guideline change. We've stabled off now, and I think we have a better understanding of where this market is going to take us in the next several months. We have a better understanding as far as we can see. Nothing is certain. It's definitely unpredictable. These are uncharted waters for sure. But people are still making moves when it comes to their mortgages, whether it's buying or refinancing. The savings is still out there. The benefit to be a homeowner to purchase right now is still there. If anything, it's even more prevalent as, if you were on the fence about buying, this should kind of, waking you up and let you see the importance of being in your own home and having that security for your family. So, people are still buying. My phone is still ringing. I'm still, sending out those pre-approvals and getting people ready for this purchase.
Yeah, I know. I've actually seen on your Facebook, you've closed like two or three deals since this whole thing went down.
My highest month to date in 2020 was in April.
Wow.
Yeah, I should do a nice little volume in April. March was the same. It really felt like people were panicking, right? So you had all of these buyers that I had been working with for months since, third, fourth quarter of 2019 that have been pre-approved. Were kind of dragging their feet. They wanted to see what the rates did come the first of the year. Then you had all the talks about the Fed cuts, which we're going to get into that on how that did not directly affect mortgage rates, but there was a big miscommunication about that as well. So yeah, around March, especially when we started to have the safe in place measures, people were making moves. And it's just to make it very transparent. If you have a stable income and you were in the market, nothing should deter you at this point. You should still be in the market. You should still be actively out there because sellers are selling their homes. A lot of people have backed out. That's understandable because of what's going on. But again, like I said, the benefit is still there. So yeah, I've had some really good months, and April should be a strong finish.
Yeah, no, yeah, I agree. And I'm really glad to see that, especially during these times where everyone's thinking it's the complete opposite.
Absolutely.
It's good to see that you're still working and things are still happening and people are still getting into homes and selling and moving. There's a need for it. So there's a reason why, real estate is essential during these times.
Obviously, there's a need for us. I know we feel like,
Right.
oh, the market, there's all this buzz in the news and the media makes you think we're rolling into this big recession, which we could be. But there's always a need for real estate professionals, mortgage lenders, because there are always going to be homeowners and home buyers on the market, always.
Yeah. Yeah.
So yeah, there's always going to be a need.
Yeah, for sure. I wanted to thank you guys. I keep giving shout outs to the lending department, lenders in general, because I remember when, the rates were dropping and everything was kind of going crazy, people were panicking. Your guys' systems actually like went into like a shutdown mode where like
Yeah,
you couldn't even take on new clients,
yeah.
or it was really crazy and insane. And it's good to have people like you who continue to work through it and just make things happen for their clients at the end of the day, because I know some people
Absolutely.
were having a really tough time with that.
Yeah, when you get shakeups, especially for us, because a lot of this is emotion based. You get caught up with these
Mhm.
buyers and homeowners, and when you can't provide the product that they need, it sends everyone in a twirl, right? But yeah, you just have to ride the wave, man. This has been, like I said, I've been in this industry for 16 years, and even through the market housing boom in 2007, 2008, this has been a ride. The last 45 days has been a ride.
Yeah, tell me about it. I know it's been so crazy. So,
Yeah.
what can you tell us about the rates? So, I've been getting, again, a lot of people go into this crazy frenzy and panic when the feds cut the rates. I had a lot of people like, "Hey, can I really get my mortgage
Yep.
rate at 1%? Like, I'm ready to go now. Lisa, come on."
Yeah. It's so funny. When I was in bonds the night it happened, it was Sunday. I'll never forget because I got the alert. And I'm like, here we go. And by the time I drove home from bonds off of East Lake by In and Out, I probably had 4 or 5 texts.
Oh,
And I had buyers that I just closed in like February. They were like, hey, can I really get a 0% or 1%? Like, no,
no, sorry, guys, it's not
I
happening.
would. So the best way that I could put this in like layman terms is that when you hear Fed rates are for like banks. It's what banks pay, or that's their interest rate to borrow funds, right, from the
Right.
federal government. Fed rates are short term. They affect short term bonds. They affect short term products like credit cards, auto
Okay.
loans. They do not typically, but they do not affect mortgage loans, mortgage rates. Those are what's considered long term. And those are really driven by the 10-year treasury. So as a mortgage lender, we were on standby too, because of everything going on with the coronavirus and how the government was reacting to that drove rates to where they were back in March. And if you spoke to any lender, we literally were pulling out our hair because throughout the day, we would get
I
rate
know.
adjustments that were like watching I don't even know what to compare it to. It was just like you get ready to lock in a loan, and then 10 minutes later you get a pricing adjustment for the worst and another pricing adjustment. It was
Wow.
crazy. So yes, so to just summarize it, no, rates are not 0%. They are not 1%. They are still very historically low.
Yes.
I am still locking in first-time home buyers on most of my products under 4%.
Wow.
Government products have better pricing, so government products are coming in well under 3%. Um, but that is always subject to change. Every
Yeah.
day, something new happens in the market. There's a different, with the stimulus package that we thought we
Mhm.
would see rates continue to drop, and it really didn't. And then you had lenders that were just sitting and watching their assets. They inflated their rates to
Yes.
control volume. We did so as well, and it was just it's a move to really gain control of the unexpected, to try to get as much control of the unexpected as possible.
Right.
Because what we do know is rates should remain low. How long? Who knows? It really is just going to depend on what the after effects of this coronavirus and the government's response to the coronavirus, what that is and how that looks and how that's felt. So yeah, rates are still in the threes on most of our purchase products. And
Right.
it's still a great time to take advantage.
Yeah, no, it definitely is, and I am seeing that. But yeah, it's good. Thank you for clarifying that for us and for
Mhm.
everyone, because I was getting, a lot of people were just misunderstanding of, the Fed rates and then your mortgage rates are two separate separate things.
And I blame the
So
media. You know, the media
yes,
posted, "Hey, 0%," and you have people like, "What?" Because everyone kind of knew rates were going to drop. You kind of felt it, right? And you
right.
could hear the buzz around it. We were even being told to kind of hold off on locking, float your loans. Let's see what the rates do when the Feds meet next week or that week or the week after. And it just didn't. It was
Yeah.
quite the opposite.
Yeah, no, and then like you said, you had to increase your rate just to gain control of the amount of applications and people that were submitting into to buy into refinance too. Because it
Absolutely.
is still a great time for those homeowners to refi. And it's happening. Are you seeing a lot of cash out refis, or more of just like we just want to get our interest rate lower type refi?
I'm doing most of my refinances are rate and term refinances. Cash out refis are really beneficial if you're taking out a lot of cash and it's desperately needed,
Mhm.
because we're in a time where, another aspect of the rates, when the federal government authorized the forbearances for banks to authorize the forbearances across the board. That sounds appealing, but that is very harmful on
Yes.
the mortgage side.
Yeah.
It's very harmful to servicers to have these loans that they have to service, but they're not collecting payment on. So it's when it comes to risk factors at this point, a cash out refinance is a risk factor, a high risk
Okay.
factor, because you're essentially taking value out of your home. So you have the government
Right.
saying, "Hey, we know there's going to be a high number of homeowners that are not going to be able to pay their mortgage, so we're going to authorize those banks and lenders to give them up to 12 months to make their payment," right? That's essentially what the government's telling everyone. Well, that means, on the flip side, that it tells us that, there's a chance that home values may be affected by what's going on. If you
Right.
have a high number of forbearances, defaults, foreclosures, that brings down home values. So
Right.
if you are asking to take out equity at this point, it's like, well, you're access anytime you access equity, it's a risk. But in
Right.
this market, it's even higher risk. So there's a higher charge for that. There's a higher cost, I should say, for
Gotcha.
accessing your equity. So unless I have a home buyer that desperately needs it, maybe they've had some plumbing issues and they've got to get a huge plumbing job done, or if it's cosmetic, it needs to wait.
Okay. Awesome. Well, good to know. That's really, really good info. Good to know. So is there anything that you can think of that you might want to cover in regards to anything with Corona or just loans in general?
You know, we're taking it day by day. As I mentioned earlier, and I stand by it, if you have stable income and you are in a position to buy, this is still the best time to take advantage. The market, as you can attest, the market is great. It's thriving. Values are remaining steady. I feel like I have to sneeze. It won't happen. I don't want to sneeze on camera, Lord. Oh.
That's okay.
So so
We can
if that has been your goal, don't lose sight of that goal. The rates are, I mean, absolutely favorable, and we just don't
yes.
know how long this is going to last. So don't let the fear outweigh the benefit of purchasing or refinancing. If you are on the fence and if you have higher than a 4% interest rate, get out of that. Get out of that now while you
Absolutely.
can. Take advantage of what the market is giving us, and they're giving us really good rates and strong values.
Good. Yeah, that's good. That's what I keep telling people too. It's, let's not make our decisions based off of fear and emotion. Let's look at, are you ready? Are you qualified to buy? Can you make the payments? And like you said, rates are still historically low. So if you're thinking
Absolutely.
about it and we're on the fence, now is definitely a time to act and get those plans into motion for sure.
Absolutely. If anything, this has shown us is that things can change like that.
Right.
So if today you're in a position, you just have to go with today and ride it out.
Yep, exactly. Yes. Now, so let's say that I am ready to buy. I have been thinking about it and I'm ready to go. I'm a first-time home buyer. What kind of documents do I need to bring to you, or what kind of documents do I need to gather to get the ball rolling?
So for anyone looking to obtain a mortgage at this time, you need to have the following documents at hand, not on the top of your mind where you're thinking, oh, it could be. No, you need to have the documents at hand. You need to have your most recent pay stub covering the last 30 days. You need to have your last 2 years W-2s, that would be 2019 and 2018. If you're self-employed, you would need to have your full complete tax return, personal and business if it applies, for the last 2 years. If
Okay.
you have not filed 2019 yet, then you would need 2018, 2017. And then outside of that, that's enough to issue a pre-approval. So if you were to come to me and say, hey, I just want to see how much I can get qualified for, I particularly don't like pre-qualification letters. I think that they're great to give you an idea if you're not serious, but I like for people to come to me when you're serious, when you really want to know, hey, what do I qualify for? What does that payment look like?
Right.
Because when I send you over to one of my realtor partners, or I circle you back to your realtor, they need to know, hey, where am I taking them? What am I showing them? I don't want to show them 300,000 and they can only comfortably afford 150,000.
Right.
So I like
Super
to do
important.
all the footwork up front.
Right. Good. No, that's good. And that is super important. And again, like every time we talk to a client who is interested in buying, that would always definitely be our first step when I sit down and talk to them, would be to, hey, let's gather all your documents and let's get you over to a lender to see what we can look at and what you qualify to buy.
Absolutely.
Yeah.
And
It's
in that conversation, I do go over where the money's coming from. You know, right now, today, we still have down payment assistance programs available for certain products, loan products. They are a little tighter as far as credit qualifying, so not everyone will qualify for them.
okay.
But if that was to fall out, I like for my buyers to have a backup. Like, hey, do you have a 401k? Do you have access to gifted funds? Could your mother, father, sister, brother potentially provide your gifted funds for your down payment? We go over closing costs. But as far as documentation, the most important is your income. We have to know what you qualify for, and if there's anything we need to work on as far as credit to get you to the price point you desire. So you need to definitely have a full, thorough conversation with your lender. Transparency is key. You know, if you
Yes.
have any changes coming up, if you feel like, hey, I'm going to quit my job, I'm going on leave, I'm taking a sabbatical, you know,
Right.
whatever the case may be, you need to have that conversation because it's just going to better equip you and your real estate agent when you are ready.
Right. So just to backtrack a little bit, do you think it's harder now ever since coronavirus? Do you think it's harder now to get a pre-approval, or would you say it's kind of the same, or how are you seeing that?
You know, it's not hard. I think that if you have credit challenges, you've always had credit challenges. And you know, before the last 45 days, there were more products for those that have those credit challenges, or maybe have a lot of debt, student loans, things of that nature. Right now, those same products are out there for you, but we just need to tighten you up just a bit. We need to maybe pay off a couple of things just to make sure you're in the best position for this mortgage, because we want to make sure that as a lender, we're doing you we're working in your best interest, and that we're just not qualifying you for something that you're going to have troubles paying in 2-3 months. So it's not harder to get qualified for a loan. You just need to be a little more buttoned up. There's definitely guideline changes. FICO score requirements across the board have changed with many to most lenders and banks. I think the most recently we all heard Chase now has a 700 minimum FICO score, and that's tough.
Yes, it is. It definitely
When I bought my
is.
house, I didn't have a 700 FICO score, so that would have been, you know, that would have been rough for me. But that's just showing you that these banks don't want the risk factor. They want to service the loans currently on their books. They don't want a lot of future issues, right? Future forbearance requests, and so they're just really taking really strong credit profiles. Where Loan Depot still have some products that cater to the lower 600s, lower to mid 600s. But the days of being in the 5s, you know, for a mortgage loan, they may be gone for the time being. And it's just because, you know, when you are putting less money down, you have less than perfect credit, there's just too many risk factors on your loan. Although you may be, you know, you may pay your mortgage on time before the first of the month, that's
Mm-hmm.
fantastic, but that's not the majority. Majority of the people that put less money down, that have lower FICO scores when they go into a mortgage, they tend to apply for the forbearances when they come up. And so that's just something that, just based on statistics, that's just, that's the ruling.
Okay. Okay. So we don't necessarily have to have a 700 credit score, but if we can get into the 600s, then we should be okay, or we'll have a fighting chance of getting pre-approved or an approval.
So currently, I need you to be at a 640 or above for a government FHA loan.
Okay.
That would be the lowest we are currently offering right now.
Okay.
Conventional requires a 680. That's Loan Depot standards. A lot of the companies, mortgage lenders, are roughly the same, if not higher. A lot of them are 680 across the board. There's not a lot of tolerance right now. We're in a really sticky time where we just need to see how this market reacts to everything, and from there either start to tighten or loosen up the guidelines.
Okay.
And this could be temporary. Hopefully that this changes within the next couple of months, once we again see where the virus takes us and the reaction to the virus from our economy standpoint, from an economic standpoint, I should say. So it's just really just waiting to see. But if you have less than perfect credit, if there's some things you need to work on, it's definitely critical that you speak to a loan officer now to see how you get to where you need to be.
Okay, good. That was going to be my next question that I wanted to know. If I'm thinking about buying, within 3 to 4 months from now, or how soon or how late should I start the process? Because I know that my credit score is not at the 680 right now. So how soon should I come to you and get that handled?
Today. The moment you wake up and say, you know what, we're really going to do this. I'm going to be a homeowner next year.
Yes.
You need to speak to someone today, because you just don't know. I have so many homeowners, I kid you not, or just so many clients that they're like, yeah, I'm just calling to see what your rates are, and I give you today's rates. I'm like, yeah, we're not looking until the end of this year. Well, getting a rate today does you no justice,
right,
if you're not looking until the end of the year. If you are inquiring about rates, that means you're inquiring about payments. You're not necessarily concerned with the rates. You want to know what the payment is. So we need to see what you qualify for, not what's out there. And then that's our starting point. So we say, okay, you qualify for this, but if you do this, I can get you here. It's really a game plan. And the difference when you work with a direct lender or a local lender versus an online lender or a bank is they want you to be ready. When you submit that application, you're either approved or declined, and then they move on. A local lender is going to give you that more personal experience and really help you to get to where you need to be. So you need to start today.
Yeah, you heard it there. You need to start today. So if you're thinking about it, I'll have your information down below on the video. So if you guys are interested or have been thinking about it, I highly recommend and suggest talking to Akeia about it. She's great, and she knows what she's doing. 16 years in industry and very well-rounded. So you heard it. You ready? Let's do it today.
And keep in mind, most first-time home buyers start the process 6 to 12 months before they actually put their very first offer in. So, people aren't just waking up, buying a house, and closing 30 days later. This takes time. It's a very emotional process. There's a lot of people involved. And so you have to really work with the right team. You need your real estate agent and your lender to be on the same accord to make sure that you're not only getting the best deal, because that's important, but that your financing goes as smoothly as possible. And again, starting the earlier the better to be more prepared.
Awesome. Well, thank you so much. Thank you for being on this call with me. This has been a long time coming. I know a lot of people have had so many questions, and I'm just really glad that you're able to answer that everything for them. So thank you.